You have, as I understand it, a number of different debts with banks and with credit cards, and you're asking me for my advice that if you are a litigant in person, how should you handle it? The first thing I'd say is that there are two quite different routes you can go in dealing with banks and credit card companies. The first is simply dealing with them on a commercial basis. And that means that if you are in financial difficulty and you present your finances in a clear and accurate fashion to creditors, they will take account of that and may structure for you either a payment plan or some sort of settlement. But in my experience, the level of settlement that you will get will be substantially better if you do more than simply recognize that they want their money back and that they structure their response to your commercial position to get their money back. And let me explain what I mean by that. Firstly, there, as has been reported in the press, are a number of areas in which both credit card companies and banks in their lending have not been compliant with the Consumer Credit Act. And in some circumstances, where they fail to comply with the Consumer Credit Act, it means that the debt is unenforceable. So I'm going to focus most of my comments here on the first section, which is defending your position, because once you get past a commercial discussion with banks and credit card companies, most often they are inclined to either threaten or to take legal action. And the one thing that is most usual with credit card litigation is the banks or the credit card companies trying to enforce the debt. I think the best way to describe the areas in which you as a litigant in person can defend yourself is to break it down into the following categories. The first is whether or not they actually have an enforceable agreement because they have a copy of the original agreement. Now, under the way that credit card and other consumer debt works these days, that divides itself between whether or not your Consumer Credit Act agreement was signed before or after April 2007. If it was signed after April 2007, you have less options available to you because the courts take a far less strict legal view for matters signed after April 2007. But let's assume your debt was signed before April 2007, and the first thing that the creditor has to do is to be able to provide you with a copy of your agreement. Now, it doesn't have to be the exact same agreement that you signed, but it has to contain all of the key terms. And there is a provision under sections 77 and 78 of the Consumer Credit Act, which entitle you on the payment of a £1 fee to write to the creditor and ask them to provide a copy of your agreement. They have 40 days in which to do that. Unfortunately, if they don't reply in 40 days, there's not a lot you can do, but if they don't reply at all, they cannot enforce the agreement. Now, if they reply, but the agreement isn't a proper copy of the original agreement, for example, if some of the terms are different to the original agreement, that's also unenforceable. The circumstances where this most usually arises is where debt is sold in what is known as the debt purchase market, which is a market where nowadays often private equity capital backed debt buyers buy all types of consumer debt, from store card debt to credit card debt to bank loans. And when it is bought by a third party, it's often the case that the acquirer of the debt purchaser, isn't at the time that they've bought the debt given the original credit card agreement. And in many, many cases, once they've bought the debt, the seller of the debt, who is your original creditor, loses interest in the whole thing. And despite the fact they will go to the seller of the debt to get a copy of the credit card agreement, they often can't. So you might find yourself in a position where you send in a Section 77 or Section 78 request. They either don't respond or they respond by saying they haven't got it, in which case the debt is unenforceable. That's not really the end of the matter, because that just means they can't bring legal proceedings against you to enforce the debt. However, your credit history is retained by the three major credit reference agencies, Equifax, Experian, and Call Credit, for a period of 6 years after any default on the debt. So it may impact on your credit score and therefore your ability to obtain credit in the future if you haven't resolved the situation with the creditor, even in circumstances in which they can't supply the original agreement. So that's the first thing that you need to think about. The second thing you need to think about as a litigant in person dealing with consumer debt is, are there other compliance issues that may mean that the debt is unenforceable? And they basically fall into the following categories, and these all equally just apply to agreements signed prior to 7th of April 2007. The first is as a result of a High Court judgment some years ago, where you have taken out some sort of credit, be it a bank loan or a credit card, and where the creditor has provided you with payment protection insurance. If they did not get the correct notice of cancellation rights in their original documents in relation to the payment protection insurance, then that actually can invalidate the right of the creditor to be able to reclaim on the underlying credit itself. Now, going back in the period 2000 to 2005, many creditors got the wrong notice of cancellation rights for the payment protection insurance. What they did was just give the same notice of cancellation rights as you get for a loan, and the High Court held that it has to be more explicit, more detailed. So you can often find that where there's payment protection insurance, the underlying credit may not be enforceable. The next area is whether or not they've complied with other provisions in the Consumer Credit Act. For example, there are obligations on a creditor under Section 86 of the Consumer Credit Act to provide both arrears notices every 6 months and to provide default notices which are in compliance with the Consumer Credit Act. And failure to do that may at least cause them some difficulty in pursuing you with your debt, because you can rightly put in a defence that they've been non-compliant. Another area that's worth exploring is in circumstances in which the debt has been sold to a debt purchaser, they are obliged to give you a notice of assignment, and that notice of assignment has to be in terms that are compliant with the Consumer Credit Act. So all of those allow you to do two things. One, if I look at the item 6 on the list of 13 that Help for Litigants in Person suggest, in defending your position, you may want to look at defending your position because they've failed to be compliant with the Consumer Credit Act. But you could also use it in what could be described as mediation. Sometimes you can go to the creditor and say, hey, you haven't provided me with a copy of my agreement. Or you could go to them and say, hey, you have never given me a notice of assignment. Or you could go and say, hey, I've never received arrears notices or default notices. And you can say you are non-compliant, and therefore, in being non-compliant, you can't enforce the debt, and therefore I will offer you a substantial discount on the balance to settle the debt in full and final settlement. And particularly debt purchasers are more inclined to do that. My own firm averages 21.2% of balance in our negotiations of settlements of debt. And there's some other areas as well, particularly for the small businessman, and we do a lot of work in helping small businessmen defend claims for enforcements of personal guarantees, which has been a big area since the downturn in the economy in 2008, where banks are going back to entrepreneurs and saying, you gave a personal guarantee, we are going to try to enforce it. Often personal guarantees for business debts aren't covered by Consumer Credit Act provisions, partly because they're business lending and partly because they're most often above $25,000, but you can certainly question the enforceability of the personal guarantee, and there are various areas in which you can look at to question it. The first, by way of example, is that a personal guarantee has to comply with the provisions of the 1977 Unfair Contract Terms Act. And you might find that the personal guarantee is so one-sided that it doesn't comply with that, which could make it unenforceable. A personal guarantee should only be enforceable when the creditor has actually called a default on the underlying loan that relates to the guarantee. The personal guarantees need to be compliant with any standard statutory provisions, so that if they're expressed to be a deed, then they have to be completed as a deed. So there are a range of areas that you can challenge in relation to enforcement of personal guarantees. Let me just touch on a few issues that you need to be conscious of if you are going to defend your position. The first is that the small claims track of the county court proceedings has recently increased the limit on the size of claim that can be undertaken on the small claims track from £5,000 to £10,000. And one of the big advantages, if you are a litigant in person and defending your own position of a small claims action, is that costs are generally not awarded in small claims cases. So even if you're not 100% comfortable that you're on the right track, mostly you can avoid the risks of costs being awarded against you, which is one of the dangers of litigation. You do want to check one provision, however, because there is an exemption to the rule that costs are not awarded in small claims. And that is that if the contract itself provides for an indemnity costs award, then it is possible for a claimant, namely the creditor, to achieve costs against you. And I had one client, unfortunately, where we lost the case, and had a £3,000 debt and ended up with an £8,000 costs award against him. Now, we lost the case, I think, somewhat unfairly, but we decided not to appeal. I tell you that because, one, it's the only case I've ever lost in the small claims court, but two, because there are some risks, and unusually those risks can lead to greater financial exposure than the underlying debt you have. So that, I hope, gives you some flavor of dealing with consumer debt in the context of your 13 options.